I think one of the things that people need to keep in mind, in particularly within the administration, is uncertainty has a price, and that price is you assign a lower multiple to equities. And so that is seen in real dollars. So the valuation goes down because the multiple with which you're willing to assign to the market overall or individual names, because the certainty of the future, while it's never certain, is diminished. When you have these policies. So I think it's really something they've got to keep in mind and certainly consider as they're doing this.
RenMac Off Script originated as a weekly internal research meeting designed to summarize and discuss what happened in Washington, the markets, and the economic data over the past week. It was always intended to be and remains a free-flowing conversation with no discernible objective other than to extract the wisdom and opinion of our analysts and their expertise. This is a conversation among colleagues. Individual circumstances are unique and nuanced. Do not mistake these conversations for investment advice, because it's not. Here we go.
Welcome to RenMac Off Script, where we open to discuss markets, economics, policy, history, and life. It is Good Friday, the 18th of April. Thank you. 2025. I'm Jeff DeGraff.
And I'm Steve Pavlik.
And Neil Dutta is on spring break. So you got the two of us today, but we're going to get right into it because there's plenty to talk about. I just got back from South Carolina, Kiowa specifically. And I would just say this because I know we have a lot of listeners and a lot of subscribers. If you've got a 3-season town that you think is a good place to go from a, kind of empty nesting perspective, because that's about where I'm headed, I'd love to hear about it, because Kiowa was great. It's kind of the Connecticut of the South, if you will. I'm sure they're cringing at that if anybody is from Charleston right now. But look, it can be golf, it can be water, it can be culture. If it's got a university, even better. I think all those things are pretty interesting to kick around. I know you've been down there, Steve, and certainly I do enjoy it. I wonder if Chair Powell is enjoying his time now, even though I know he's not down in the warm weather. He certainly seems to be in hot water. What's going on? Trump has talked about this before. Neil's talked about Walsh before. He's not a big fan of that. There's a couple clips on our Twitter account that talk about that. But in terms of independence, it's kind of the holy grail of independence in the government has been the Fed. What's your sense as to what he can do? Is this bluster? At this level, it seems to me like it would kind of take two strong personalities and say, just because you're saying this, I'm certainly not going to buckle. And I don't think Powell is one of those guys that would. But does he actually do the opposite and maybe, kind of think about it from, I don't want to cave to this political pressure, so therefore I'm not going to lower rates when maybe I otherwise might be 50-50 or 51-49 or whatever the case may be. What are your thoughts here?
Well, I think the thing that's important to remember, as you said, Trump's talked about doing this a lot before. He talked about doing it in his first term. Well, he may have a lot of frustrations with Powell. Ultimately, he never followed through. And so I guess that's sort of where I'm still at, is while he's definitely frustrated with Powell, I don't really think at the end of the day he's going to be inclined to try to forcibly remove him before his term ends in May. I think from, Powell's perspective, hopefully he's not going to let this influence him. He doesn't seem like somebody who would. I think from why he may be doing this, it's always sort of dangerous to speculate what may be in his head. Look, the day before you had Powell giving a speech in Chicago where he's talking about the effects of tariffs may be worse than they were worse than what the Fed had anticipated in terms of the severity of them, and now that might lead to potentially larger economic impact. Again, that's more in Neil's category. So I'm sure Trump didn't like hearing that. And then, I think from the trade perspective, where Trump is right now, he referenced the European Central Bank reducing interest rates. So that was something that Trump expressed frustration over Powell the last time he was engaging in trade wars, particularly with China, was at other countries' central banks, less independent, where sort of helping their negotiating position. So I don't know that that's going away. If anything, what Trump may be doing is trying to create a scapegoat if he sort of believes that the economy is going to slow moving forward. He's declared all these economic emergencies. Powell, therefore, isn't a patriot if he's not playing ball. So my guess is at this point, I think that's probably where he's headed. I think the other thing to point out too is it's been reported that Treasury Secretary Scott Bessent and others sort of been advising Trump not to do this. We have a lot of economic, financial uncertainty right now. Clearly, removing Powell wouldn't do anything to help that. Probably gets turn it back over to you as to what that might mean for the dollar and other, I guess, sort of things that could be impacted were Trump to be sort of move more seriously down this direction. You asked me about what his options are. Again, it's never been tested to remove the Fed chair for cause. I don't know that we have anything in the for cause area right now. What Trump could do is try to demote Powell. Then presumably he would try to elevate one of the other Republican sort of appointed governors there, whether it was Waller or Bowman, at least temporarily. That might be something in his more immediate control. But again, I don't know that he seriously wants to go down that route either.
Well, they talk about this shadow Fed, right? Which is he essentially has another year left, I think, maybe just a little longer than that.
And that was something that Treasury Secretary Bessent mentioned prior to becoming Treasury Secretary. Now, again, whether that was sort of trying to placate your audience of one there to try to win the Treasury Secretary position is something that people can, I guess, speculate on. But the idea, to your point, and it's been reported that Bessent will probably interview candidates around the fall, and presumably an announcement could come shortly after that. Although, as you mentioned, Kevin Warsh sort of believes he was led to, at least he believes that he's sort of the heir apparent there. So do you sort of announce somebody early? At that point, markets try to take their cues more from them, Trump. Is that person sort of tainted in the sense that they're going to just be viewed as less independent? Whoever Trump picks, because of that association, is probably going to be something to watch moving forward too. But I just go back to where we are with respect to this whole trade and tariff policy. You probably just have a lot more concern right now about the credibility of the U.S. financial system, economic system. I don't see how any of this helps it. So I think that's sort of the thing to watch moving forward.
Well, it also, I think one of the things that people need to keep in mind, in particularly within the administration, is uncertainty has a price, and that price is you assign a lower multiple to equities. And so, that is seen in real dollars. So the valuation goes down because the multiple with which you're willing to assign to the market overall or individual names, because the certainty of the future, while it's never certain, is diminished. When you have these policies. So I think it's really something they've got to keep in mind and certainly consider as they're doing this. One of the things that happened this last week is the Mag 7. We saw a dark cross there. A dark cross is nothing more than a 50-day moving average crossing underneath the 200-day moving average. It's a relatively simplistic, but at the same time, a very good indication of trend and forward returns. And I'll just throw some stats, and I think I've done that before here, that the annualized alpha of names of the 50-day above their 200-day moving average is about 74 basis points. Not enough to get you on the cover of Forbes, but at least it's positive. Better, I might say, than almost every mutual fund that's out there in terms of providing positive alpha. If you look on the other side of the equation, the 50-day below the 200-day moving average, you can see that on a single stock basis, alpha tends to run about negative 104 basis points. So, a lot of bad things tend to happen, particularly from a risk-adjusted return standpoint, when you've got these names that are in dark crosses. So the Mag 7 as a collective, that's NVIDIA, Amazon, Meta, Google, Tesla, et cetera, are in that formation right now, and just really speaks to, what we've already seen for the S&P, what we're now starting to see in that concentration effect of those names that, were so popular just 6-9 months ago, and have now seen a little bit of what's the green stuff that you get on copper? Little oxidizing. Yeah, the green stuff on copper. That's what's on the Mag 7 now. So we'll look at that. But I think another interesting stat, an important one on the S&P overall, is only 44%. Actually, this is as of Wednesday night, so it might be worse today. Only 44% of names do have their 50-day above the 200-day. So even if you weren't seeing that for the market overall, internally, the number of names, if it's less than 50, it means that obviously more than half of the names are in downtrends on the S&P, and that tends to be important. And that's really when we look at bear markets and our trend models, and we really try to discern where trends are. And I say that because trends are so important in this business. Because if you're in an uptrend, then good things tend to happen. If you're in a downtrend, bad things tend to happen. And within that, and we talk about this on this pod, you have tactical, which are things that are around sentiment and some of the things that we've been talking about more bullishly, that really take place underneath the underlying trends. And so we think about the trends as the score of the ball game, right? How many runs have been scored? What's the score of the game? I think about the other stuff really as how many runners have been left on base, what's the pitch count, kind of these other things that do have influence on the overall score of the game, but really kind of keeping your eye on the big prize, which is that score, tends to be well defined by trends. So just with that out there, everything that's happening is now happening within the context of a downtrend. And I think we need to be super aware of that. And obviously, any type of uncertainty around the Fed and the institution there is likely to lead to a lower multiple, which does not help, by the way, get your trends back in line. So let's move to trade, because that's obviously a big one. Kind of the scorecard as we're seeing it. And then let's reserve China, because that's kind of in its own camp here that you can get into. Maybe we can't. Maybe it all is part of the same idea. But who's coming to the table? Who's waffling? Is there a strategy to this? If there is, can you shed some light on it? What do you think? And how is it going? I mean, we have 90 days, which is now down to what, 70 days, 75 days, something like that. So where do we stand on that, Stephen?
Well, I don't know that we can divorce the issue of China from the reciprocal rates, because we saw reports sort of informing, I think what we've been saying for a while is that the strategy here is to try to get other countries to isolate China. And I think when you think about who were the first, the queue here, most of these trading partners are ones that are strategically important. They're large economies. It makes sense that you want to start with the bigger ones first, and then sort of hope that the smaller ones are eventually going to fall in line. And I think when you look back what the order was during Trump 1, he negotiated sort of phase 1 deals with Japan, Korea, and Europe. I think they're sort of at the front of the queue this time as well. Not surprising. And one of the asks, besides doing things to like reduce the tariff and non-tariff measures and boost U.S. exports and the like, is to try to shift the emphasis from the U.S. having trade restrictions on tariffs, export controls, getting other countries to do that, to apply those on China as well, to address this issue where China is basically just rerouting their products elsewhere. Now, in my opinion, is sort of we had this initial focus on the tariffs with respect to U.S. and China, and I guess more the trade measures. So you have tariffs and export controls. I think now the emphasis is really on this diplomatic battlefield to see, which countries are going to align with who, and that's probably going to occur over the next probably few weeks, maybe months, as you point leading up to this 90-day pause period. And then I think at that point, that's when the U.S. and China are really going to assess where they are diplomatically, and that's going to influence how they probably approach some negotiations at some point that seem inevitable. I know it's difficult to see what that off ramp might look like. Again, I think it's going to be influenced by how these diplomatic discussions go. And I think if talks between the U.S. and China don't go well, these trade restrictions, we're talking about billions right now in terms of tariffs and exports. If we start moving into financial weapons, things like delisting Chinese companies from U.S. exchanges, things like sanctioning Chinese banks, now we're talking about trillions. And I know you've been sort of ahead on some of the investing there in China as being, optimistic about that. I guess I just wonder, from your perspective, were the U.S. to go into this idea of delisting Chinese companies from U.S. exchanges, something that Treasury Secretary Bessent, when asked, said he was not off the table. What would that mean? What would sort of the market reaction be to that?
Well, I mean, that is outside the realm of anything that you consider when you're an investor. I mean, one of the conversations that I had with now Secretary Bessent 4 or 5 years ago in a podcast that we did was him talking about the importance of imagination in this business and how a lot of people are called one standard deviation thinkers, and that makes sense, and that's kind of how I think about fundamental analysis. But you really have to be very, very imaginative in this business to just kind of be willing to accept and understand what happens, and that's just not something that I ever would have considered, right? I mean, that's a Six Sigma type of event, six deviations from what you'd kind of expect, if not more. So that's, and again, talk about uncertainty. So then what does that do to European trading partners? And, I mean, does that only apply to China? Probably not. At least, once you kind of break the seal, right, anything's on the table then. So that certainly is uncomfortable. Now, I would say, amazingly, that when I look at the indices, both Hong Kong and China, they have held up very, very well during these negotiations and tensions. So, really, if you would have expected that you're going to have this be really the white hot light of trade, I would have expected these markets to actually not do as well. Now, that might be a byproduct of their internal policies now, or domestic policies now, being more stimulative, trying to really understand and offset that, and that tends to be bullish for what you're seeing there. But those charts are still good. We are officially still there, and I do consider that, though, because I think you have to protect yourself in some way, shape, or form, because this is just something that wasn't on the table. This has nothing to do really with the kind of traditional macro signposts that we look for. It's not, here's sentiment, here's valuation. Oh, wait, what about the delisting? That's not on my playbook. That's not on my checklist. So that certainly does throw a wrench into things. Where do you come down on the dollar? The dollar's been weak, and in fact, we posted this week. The dollar's oversold from a macro perspective. We've had a bounce in equities. It's kind of running out of some steam here. It got into the oversold condition, got to a non-oversold condition. Beta is still very, very oversold, so I think there's still something there. Our sense was that we trade back to the 50, maybe the 200-day moving average, and that would be a point where we'd have to be, really reassessing kind of what's happening again, because we're in this downtrend, so we need to think about it within the context of the downtrend. But last week we did get into our oversold conditions on our oscillators, being at a point where they were actually neutral. They weren't overbought by any means, but they went from this -3 zone, which tells us that we look for some reversion back to zero, to essentially zero. And so you got that, and you didn't really have the thrust. You didn't have a big move. And so, it's kind of in limbo here, and in limbo in a downtrend is, vulnerable. That's what how that plays out. What I do find interesting is the dollar's still oversold. And so when you think about it from a trade perspective, the oversold dollar to us looks like it's got a better chance of actually rallying from here than trying to add, additional returns or eke additional returns out of equities. From a trade standpoint, is this, and I know we had Howard on last week, is this part of the chess game of seeing the bond markets repatriate some of those treasuries or dollars? In that case, we've seen the sell-off on the longer end of the curve, the dollar weakening. Not something you'd expect given the policy differentials, right? If the Fed is going to be less accommodative, you would expect actually the dollar to rally around that, but it hasn't. What's your sense of what's going on in the dollar? Because I think it is an important part of the calculus that might not be as carefully considered here as otherwise.
Well, I guess what I think about the dollar is usually its reputation as a safe haven asset. So in times of geopolitical turmoil, you expect more of a flight to the dollar to increase it. Now, I think maybe what may not be applying here is that it's U.S. policy and maybe sort of crisis of confidence moving forward that's actually causing the geopolitical uncertainty. Maybe that's where it's leaving investors looking for some desired, I guess, safety elsewhere. In terms of the dollar's status as the reserve currency, I guess I could go back to Tina. There is no alternative. I think people looking for that are really going to struggle to find a credible replacement there. Got a lot of questions from clients over whether Trump wants a strong dollar or a weak dollar. You have varying views there within the administration. Trump's expressed at times those varying views. So I guess that's not entirely clear to me in terms of trying to make obviously U.S. exports more attractive in some of these negotiations. Perhaps that's something that will aid in its effort there. And I sort of think about how other countries might respond. I mentioned some of the things that China could do, or sorry, that the U.S. could do to China. One of the questions I get a lot is, would China dump U.S. treasuries to try to respond to some of this? And I remember being at the Treasury Department. We used to go up to the Hill a lot to do these briefings. And one of the challenges that China has right now is China is taking measures to devalue their currency. But if you were going to dump dollars and buy the renminbi, then that would actually go against that goal, would appreciate your currency. So then what are you going to do? Are you going to buy like euros? You're going to try to shift the burden and upset all the Europeans when you're trying to pull them as part of this diplomatic battlefield discussion we talked about? I don't know that that's in your interest. So then, do you just buy gold? Can you conduct trade in gold? So I guess I would sort of turn that back to you is, where has gold performed in this? And, we talked before, I think last year about a lot of central banks buying more gold moving forward. Maybe that's sort of the thing in terms about what the dollar demand is moving forward. If other countries are just going to reduce their purchase of treasuries and dollars, maybe there's something there.
I mean, look, that's the way the world operated 100 years ago, right? Which was gold was the asset of choice. It moved to dollarization after Bretton Woods, and is there kind of this stamp of approval now coming back to gold? And I think part of it, and it's a great question because it's unknowable right here, but certainly if you look at the performance of gold, and it really started in earnest with these sanctions around Russia and the war in Ukraine. And look, I mean, I get it. We're the 800-pound gorilla in the room, but you can't just flail your arms and want bananas whenever you want, right? I mean, you have to kind of be well behaved, or you're going to get the taser. And I think that's exactly what's happened here, where people look around and say, "Hey, look, the whole dollarization thing was a great idea up until you sort of started abusing it, right? And putting sanctions on us and doing these things. And if we're gonna the Soviet Union or Russia is going to start to move away from that. What's to keep the Chinese from moving away from it? What's to keep the Europeans at some point moving away from it? So I think, when you start sowing these kernels of doubt into the marketplace, they can take root. And if they do, that becomes dangerous. But it's pretty clear: weak dollar, weaker bonds, higher yields, and strong gold. That combination is, generally a one-way street, which is people are taking assets out of the U.S., repatriating those into either their own home currencies, or into another asset. And that's important because it's a fragility that I think needs to be understood, appreciated, and nurtured back to gaining trust. Now, the other question here is this a ploy? And that's probably too harsh of a term, but is this an attempt to gain negotiating leverage over this 90 days to say, hey, we're not coming to the table just hat in hand. We're coming to the table also with some tools here and some strings to be able to pull. And look, if I was on the other side of that trade, that's exactly what I would be looking for. What are my leverage points? What can I do? And a weak dollar pulling our assets from the U.S. system is certainly one of the stronger cases to be made. I mean, look, we have a certain vulnerability, and our vulnerability is we need people to fund us, right? We have that large mortgage, and we need to refinance that mortgage every 90 days. That's kind of the way it works. And if we want to keep this lifestyle, we need to refinance that mortgage at a relatively attractive rate. So, what's interesting though in kind of this chess match is most central banks, I don't have the exact stats here, but just from being in this business long enough, most central banks, most governments, when they own treasuries, own the short end of the curve. So this isn't the Chinese are blowing out the back end because they own so many 30-year and 10-year. They don't own that stuff. I mean, that's just not where they are. They reside on the short end of the curve. Which is one of the reasons why we have such a large proportion of our debt financed at the short end of the curve, because it's more accommodating to to those foreign central banks. So there's a certain vulnerability there. That in turn is more easily offset by the Fed. If the Fed needs to step in, as I think Secretary Bessent called it, kind of a breaking the glass moment, right, where the Fed steps in and helps to fund that debt. That's also more of an option down there than at the long end. But clearly, and the long end has stabilized here, which I think is important. But these are things that are part of that chess game that is going to continue here. Clearly not for the next 70 days, but beyond. And the real question is this just a temporary kind of sentiment indication as to what's going on about the lack of interest in U.S. assets here? Is it a negotiating ploy? Again, ploy is probably too strong of a word, or a tactic to kind of come to the table with something other than just hat in hand? Or is this really more of a structural shift that's going to have a longer term impact? And I think we want to avoid that one because that is clearly in a camp that starts to lose our influence. The good news is generally currencies, equity values, bonds, etc. Capital will flow to where it's treated best. And if we still maintain the rule of law, and I know some are chuckling out there, that are listening to this, but if we still maintain the rule of law, if we're still good at corporate governance, if we're still good at entrepreneurialism, at really converting ideas into capital, then it'll come back for sure. And I think that's going to be important that we're allowing that to happen. That's got the long tail to it. And kind of the organic entrepreneurial nature of the U.S. is something that I don't think you want to overlook, but certainly I think we need to be mindful of some of these other influences. What are the pressure points, Steve, do you see out there from a trade perspective? You talk about kind of moving from just goods and services to the financial system, which is, as you say, going from billions to trillions. Anything else that both on the U.S. side and on the opposition side?
Well, I think we've seen China take some steps to target specific U.S. companies. You saw them canceling orders of Boeing planes. It has a ripple effect through a lot of the supply chain. And I think you've seen them sort of announce targeted investigations. I think one was into Alphabet for antitrust. That was a little earlier, but clearly they could expand that list. You also have the entity list they can put on. But the U.S. can do that, I guess, to some extent too. That's sort of the main leverage points. I think right now, other trading partners they're listening to what Treasury Secretary Bessent said. Remember, he sort of warned them, don't retaliate, negotiate. And at this point, they're still in negotiation phase. Now that could obviously, change should negotiations break down. I expect other trading partners would sort of look to retaliate. And my guess is most would probably focus on what they're importing right now from the U.S., specifically agriculture products and maybe some energy products. And then some countries may look to go beyond that where they can. But I think that's probably a more select few.
So let's use this as our opportunity now to get into this week's mailbag. Look at that. Look at that. It is the mailman, Jesus Christ himself. It is Good Friday. I hope this isn't blasphemous. Is it? You're a good Catholic, Steve. You're shaking your head. Is this? Are we in trouble?
I mean, I wouldn't tell my priest about it.
I'm not even going there. All right, our own mailman, Harry Chen, not to be confused with the mailman on the screen here. What do we have for a question this week? Harry.
Okay, happy Good Friday, Jeff and Steven. Today we have the question from Fanner Oren Arneson. His question is, hey guys, so considering the EU's 90-day pause on retaliatory tariffs in response to President Trump's protectionist measures, what are the most probable policy responses from the EU if the negotiation failed? Specifically, how might targeted tariffs, industrial subsidies, or strategic alliance impact global market and investor positioning? Thank you.
All right, so let me just give the cliff notes on that one. Retaliatory tariffs in response to President Trump's protectionist measures. What are the most probable policy responses from the EU if these negotiations fail? Specifically, how might targeted tariffs, industrial subsidies, or strategic alliances impact global markets and investor positioning? Thank you, Harry. Steve, we hit on that a little bit, but let's talk about it specifically for the EU. What do they import most? What are they most in need of? I mean, it feels to me pretty simply, the EU needs protection and they need energy, and those are kind of swimming in the same pool a little bit. But if these negotiations fail, where's the EU come back in terms of their leverage and pressure points here on the U.S.?
I think you're right to point out that what they need are U.S. energy sources, particularly liquefied natural gas, as well as defense, not only security commitments from us to aid to come to their defense, but also purchasing weapons from us. Beyond that, I think one of the things that Europe would probably consider, and they've suggested this before, is they sort of lead the world in regulation. So my guess is they would sort of target U.S. technology companies. They've had digital services tax proposals to try to tax U.S. companies before. My guess is they would sort of return, as well as some just regulatory investigations targeting U.S. tech firms. So my guess is that's probably, with respect to Europe, something that may be relatively unique to them compared to others. When you talk about the defense issue, though, and I think one of the things mentioned in the question was strategic alliances. I mean, if you're going to pick between the U.S. and China, I mean, maybe from the perspective of Europe, your options are bad or worse. I would put China in the worst category, in the sense that one of the things that Europe's already experiencing, and I think you see this with their auto market, is just the flood of these cheap Chinese EVs, BYD, and it's just decimating the European automotive sector. And now they're just concerned with the U.S. sort of blocking our consumer market. Is Europe going to be flooded with these cheap Chinese imports of other things? That's sort of a fear. What would that mean for their economy moving forward? So my sense is that Europe's aware of that. There's been some discussion, maybe that Europe will sort of look to China to try to influence Russia from infringing on Europe's sovereignty and making some territorial advancements there. I don't know why you would put any faith in China's ability to restrain Europe. I don't know that you want to rely on them from a security standpoint there. So I guess maybe I'm sounding like a homer here. I still think it's in the European Union's best interest, forced to choose between the two, that they will continue to side with us.
Yeah, that certainly seems to be the case. Well, in terms of next week, I'll go first, and I'll leave it up to you. Again, just keep in mind we're in this downtrend, the resistance level, which is a 50-day moving average. These are sloping downward, by the way, right? So when we say intersecting these moving averages, keep in mind that they are coming down. So if we intersect it next week, it's going to be lower than it is here today. 5,700 really is that key level. Again, beta very oversold. We're going to continue to watch that, and we're going to watch for moves in the dollar. The dollar and currencies generally tend to be kind of the self-correcting mechanism that moves around with policy. And you're seeing a little bit right here, right? If we have bad policies, we're going to have a weaker currency, and you certainly see that. So we always keep our eyes on the currency markets, because they do tend to be a bit of a window into the soul of what's happening underneath the surface of any given country. So we'll watch that. We'll also watch the percentage of names that are making 20-day highs. If we're able to kind of thrust ourselves through that most recent resistance level, which is essentially 5,500 as a best kind of round number. 20-day highs expanding as we get through that would be a bullish sign, a good sign of momentum. The percentage of issues above the 20-day moving average would also be a good sign if we can get that number something that's north of 90%. That's a sign of momentum. Until then, what it's telling us is all these things are bear market rallies, and we're better to be sellers of strength than looking to add to those. So we'll keep an eye out on that. In terms of Washington, what's happening next week, Steve?
Well, Congress is still out next week, so we'll have to deal with them till the following week. When Congress does return, I think there's going to be a lot of focus from Republican lawmakers trying to craft this reconciliation package. So far, they've put off all these difficult decisions with respect to spending cuts and tax cuts. When they return, they're going to have to be forced to confront those. A lot of tensions there. So I'm skeptical that they're going to be able to reconcile all those differences before Speaker Johnson's desired Memorial Day date to try to get the bill passed into law to President Trump's desk. We will see. I think the thing to watch next week are going to be, just any news on the negotiation front from these other countries. You mentioned Japan and Europe in there, this past week. I might be surprised if Korea is not in there at some point next week, and look for others. And then you have to watch the other side too. Is China making progress on its diplomatic efforts? Xi Jinping was sort of in Southeast Asia, trying to keep countries like Vietnam, Cambodia, Malaysia, sort of within their sphere of influence. So I think that's probably the really important thing to watch in terms of next week.
Yeah, well, we will certainly do that. Congrats to Fanar for the mailbag this week. Thank you for participating, and everybody who threw in their question. We do appreciate it. They're great questions. If we didn't use it, it's not because the question wasn't good. It might have been a little too specific, and those are great too. We love them, and we'll even try to hit them oftentimes on the pod, maybe not specifically, but in broader context and conversation. Well, join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter and on YouTube. You can subscribe and have a great Good Friday. That's what this is. And happy Easter to everyone out there. Cooking ham this Easter. Are you a ham guy?
I am. My sons are really ham guys, but we are doing the outsourcing thing. We're going to brunch with my parents and my in-laws. So it'll be nice.
Always popular.
What about you?
I don't know what I'm doing. I'm going to play golf. That's what I'm doing. So until then, we join us again next week. We'll see you. And again, happy Easter. Thanks.